Yeah, that's an awesome thought, Justin, and it's really that's how I approach, I guess, maybe sales pitches or conversations that I'm having with folks in the industry. There's to me like there's two buckets of knowledge that we can bring to the table, right? There's rules and laws that are specific to construction and really truly only apply to that industry, right? So that's like the accounting methods that I spoke to. And that's going to be similar for other industries too. I mean, if you're a manufacturer, there's going to be accounting and tax rules that apply specific to manufacturing, right? So there's things like that, but then there's more like general concepts. But how do you apply that to construction in the most beneficial ways? Something that always jumps out to me is like retirement, right?
Have you ever wondered how successful architecture, engineering, and construction companies scale their business?
Or have you ever wanted guidance on how to get more growth, wealth, and freedom from your AEC company?
Well, then you're in luck. Hi, I'm Will Forat.
And I'm Justin Nagel, and we're your podcast hosts.
We interview successful AEC business leaders to learn how they use people, process, and technology to scale their businesses.
So sit back and get ready to learn from the industry's best. This is Building Scale.
Hey listeners, it's Will here. Our mission is to help the AEC industry protect itself by making technology easy. If you've ever listened to our show, then you know that the three pillars of scaling a business are people, process, and technology. So if you suspect technology is your weak link, then book a call with us to see where we can help maximize your company's IT and cybersecurity strategy. Just go to buildingscale.net/help.
Hey everybody, welcome back to another episode of Building Scale, specifically the Building Connections series where I get to interview people or talk with people. I always say interview, and I always feel like that's such a weird thing because it's more of a conversation, especially in these, as we drop into a conversation I had with Cody Daniels, who's the founder of Builders Tax Group. So CPA specifically for the built world, which was, we literally met through LinkedIn, through somebody I did not know that said, hey, you need to talk to this person, which is always an awesome thing where it's like they're like, I know you enough that you need to talk to this, not even me, talk to somebody else. So I love that. He was at a bigger firm, fast growing firm, 12 years, and then chose entrepreneurship and said, hey, I can go do the CPA life by myself and just focus in the built world, the built environment. Life's too short, and he wanted to, hey, I want to run my own thing, my own shop. So as I mentioned, niched into construction, which is literally why I was like, oh, I need to bring you on because this is a area that I know very little about. And people always have questions about. Tax stuff is what I'll say. There's a little bit of a pain in the ass, for all of us. So some industry specific stuff we talk about when you think of like percentage of completion versus completed contract, or missed like interest look back and deferral strategies and all this kind of stuff. So it's fairly tactical almost in that regard. Not like he's gonna walk you through here's how you do this, but like here are just areas that like you should start paying attention to, and just to improve cash flow, which is obviously the blood of the built world, the life of it. So this was a fun conversation I had with Cody, and I hope you enjoy it as well, and I hope you learn a little bit about tax and some stuff that you could possibly do in your company. So here it is.
So Cody, you were doing tax before you decided to go off on your own. What made the big jump? Why the decision to say, hey, let's go down the entrepreneurial path? Because like generally in firms, usually partnership is a possible pathway for most. So why do the jump and go off on your own?
Yeah, great question. It was a couple things for me. My old firm was growing tremendously. When I started, they were about 50 employees. I was there for about 12 years. By the time I left, they were well over 200 employees. So it experienced a bit of a cultural shift there in terms of just the way the firm operated, the types of clients they were working with. And, so couple that with some things that I was going through in my personal life where I was just sort of having this, I don't know, sort of kind of decision to live my life in more of a way that I was just approaching everything as though there's a bucket list that I need to complete. I think, I had some family members that had some health issues, and it really sort of um, brought some things to light for me as far as like I have things in my life that I need to accomplish, and life is short, and I need to really start going after those goals. And as part of that kind of reawakening, I guess, so to speak, I was reminded that when I was a kid, I always envisioned myself running a business. And I felt that making partner at a small accounting firm would give me that entrepreneurial experience. But as my old firm continued to grow, it became, for me, apparent that at a firm of 200 people, it's not the same as being the one and only person making all the decisions. So I knew that I wasn't going to quite get that experience at a large firm. And so I had to make the choice to jump into entrepreneurship and really see for me if like that was something that I was excited about, something that I was capable of, and really, yeah, just sort of cross that bucket list item off of my list before it's too late.
Got it. So you decided, hey, I'm going to jump in, and are you happy? I guess that's maybe the first question. So far, so good, or what are we looking at here?
Yeah. So we're right around about a year that I've been doing this. I kind of went public with the launch around this time last year. I was splitting my time for a little while. I was working part-time with my old firm while I ramped things up here. I felt like that would give my old clients and my old teammates the best transition, provide them with plenty of time to find new people to take over and transition all of my old clients to the new folks while getting things ramped up for me. So I was splitting time there for a little while, but yeah, I've been full time now for about 7 months or so, and it's been awesome. Really, really enjoy getting to do more than just the work, to work on the business and not in the business so much. So out
For
there
sure.
networking, doing sales calls, things that maybe I wasn't doing as frequently at my old firm. I've been able to take more control of my schedule. And so that's allowed me some freedoms that maybe I didn't have as a 9 to 5 employee. I've lost a lot of weight, honestly, since starting my own firm. And that's been
Congratulations.
thank you.
I didn't know that was part of the entrepreneurial, what happens when you go off on your own.
I would think that's not the normal course of action, and that for other people, it may be the opposite as you're dealing with new stresses. But for me, I think a lot of the stress I may have experienced as an employee was due to lack of control, and being able to sort of take that control over has helped me just approach things in a more sort of healthy manner, get control of my diet, get control of my exercise. And so that's been maybe a not common, but a very welcome side effect of launching the business. So yeah, it's been great.
All right. So you're literally living your best life, as they say.
I guess. Yeah.
Okay. So why also go to builders? Why construction? What was the purpose there? So the listeners know you decided, hey, I'm going to niche down. Not that I'm just going to do tax, but I'm also going to do the Builders Tax Group is the name of the company. So inherently dealing with builders. So what was the why? It's just simple.
Yeah. Yeah, it's kind of a twofold answer. Probably like most of my answers are going to be a little multifaceted. But when I was at my old firm, I had an opportunity early on in my career to specialize in construction. They had a real strong client base in construction, and they had partners on the assurance and accounting side of the office that had industry expertise there, but they didn't have anyone on the tax side of the office that had that same expertise when it came to tax services and advisory. So early on, I had that opportunity. But beyond just the opportunity, it was an industry that I felt like I had a real connection with. I have a lot of family that works in the trades. My grandpa was a union carpenter for decades. My other grandpa was a welder. I've had uncles that have worked in electrical, plumbing, road construction, and now my cousins, their kids are getting into the trades as well. So I have a cousin that works in HVAC. And so it was just like an industry that I grew up around. My family's blue collar people through and through. And I'm kind of the oddball that went sort of the white collar desk job sort of route. But when you have an opportunity to jump on something early in your career, plus it's an industry that you have familiarity with and, you're passionate about, it was really kind of the perfect timing with everything. And so I led the construction and real estate tax team at my old firm for many years. And I knew that when I left, I wanted to, continue working with the blue collar businesses, with the trades businesses. It's a unique sort of mix of business owners. I think there's some strong personalities in the industry, but I like working with those types of people. It's a great industry overall. It's very like community focused. I think more so than maybe other industries that someone could specialize in. They take care of their own. I mean, the businesses I worked with for years, they take care of their employees, and it's just great people.
Got it. You mentioned opportunity. So I want to kick off some questions that will be helpful for listeners that are in the space and saying, hey, we have a expert in the space when it comes to tax. So inherently, like, what are some opportunities that are either missed or what are common mistakes that you kind of see throughout either your history of new clients coming to you, or you just see in the industry in general, where it's like, man, like you're just leaving a ton of dollars on the table in credit or in another way?
Yeah, I mean, there's a lot. I actually I wrote an ebook on this. It's 10 tax strategies for construction businesses. Maybe we could throw that up, a link to that in the show notes.
For sure.
That might be of interest to folks that are listening. But I think when I really try to think through the most common, mistakes or missed opportunities that I've seen in the industry, and this is going to get fairly technical pretty quickly, but it's accounting methods. So most business owners are aware of like the accrual and the cash methods of accounting. Even if you're not an accounting expert, just as a business owner, you get to know enough about accounting to know that those two options exist for you. Beyond accrual in cash, there are a multitude of construction specific methods available. Some for financial statement purposes, others, really only available for tax purposes. And there's a lot of missed opportunities around there. So there may be requirements to utilize a certain method. Like there are certain businesses that have to use the percentage of completion method for tax purposes. And if you're not aware of that, you're going to file your tax return incorrectly because you're not going to use that method when you're required to. But there are a ton of exceptions that are available too, that again, if you're not well versed in the industry, you may overlook. And so you may overlook an opportunity to use a method like completed contract, which allows you to defer the gross profit on your job until the tax year that job is completed. So you're not necessarily recognizing income throughout the years that it takes you to complete the job. You recognize it all at the back end. So there's incredible opportunities for deferral out there if you know how to take advantage of these construction specific methods.
Interesting. So if you were building a stadium or a data center, something massive, something really big, there are tools or strategies that you understand. Certainly I don't understand, but you understand to help your clientele to get them to, hey, these are different ways that you can approach how you're filing your taxes or what you are essentially claiming in that given year that then help both cash flow and I'm sure all kinds of other aspects.
Yeah, totally. And it's not just, those, the stadiums or the data centers
Sure.
or those massive jobs. I mean, it could be, you're a home builder and you're doing single family residences. Well, if you start, a job here, in late 2025 and you finish it up in early 2026, well, depending on the method of accounting that you're using, you may be recognizing some of that income in 2025 and some of it in 2026. Or you may be able to defer all of it to 2026. So it's not just for the massive contractors; it's for your mom and pop shops as well.
Interesting. And are these things that you understand because you have been working with the industry? Because that's always, we get this all the time at Spot, where it's like, isn't IT or cybersecurity all the same? And it's like, yeah, there's lots of stuff that is similar. That's not to say that there's not, but there is little nuances that really just play towards certain industries. Like if you are, in construction, cash flow being important, it's like, well, how do you structure a deal to not hit your cash flow because, hey, you're going to need a server, at some point in time. Hey, that's a huge cost. Okay, well, how do we make sure that like that kind of goes across the whole year in comparison to, oh, here it is, it's November and we need to put in a $50,000 server, and then that becomes a huge headache. Where if you work with somebody that understands the industry, it's like, oh, well, we have ways around it. We have ways that we can help you deal with that because we understand your needs and the uniqueness of the built world.
Yeah, that's an awesome thought, Justin, and it's really that's how I approach, I guess, maybe sales pitches or conversations that I'm having with folks in the industry. To me, like there's two buckets of knowledge that we can bring to the table, right? There's rules and laws that are specific to construction and really truly only apply to that industry, right? So that's like the accounting methods that I spoke to. And that's going to be similar for other industries too. I mean, if you're a manufacturer, there's going to be accounting and tax rules that apply specific to manufacturing, right? So there's things like that, but then there's more like general concepts. But how do you apply that to construction in the most beneficial ways? Something that always jumps out to me is like retirement, right? Like, okay, what sort of accounts can we set up for retirement for our employees and ourselves as business owners? Okay, well, we have like a 401k, we have profit sharing, we might have like a SEP IRA or a simple IRA or a cash balance plan. Well, depending on your construction business, those plans that are broadly applicable, any business could implement any one of those plans, may get greater advantages from one versus the other. So if you're a union you may be able, as owners of a union construction business, you may be able to set up a cash balance plan, which is like a traditional pension plan, essentially. It's kind of like an old school pension. You don't see it used as frequently anymore because the cash requirements are astronomical. But if you're a union contractor, all your union employees are covered by the union pension plan. So you could set this up, and as the owners of the business participate, and you would be required for any non-union employees to include them as well. So you may have some office, kind of admin staff that might participate. But you as the owners are going to be the most heavily compensated. You're going to have the most years of service. You're going to be able to put away significant dollars for retirement through that plan, much greater than you could do in like a 401k plan or anything like that. You're going to have caps that are going to apply to those other plans. With this cash balance plan, depending on the size of your business, you could easily be putting, 6 figures a year away for yourself.
Wow. Okay.
Current year tax deduction. So you're getting the tax deduction in the current year. So it's reducing your current year income. And the bulk of those dollars are going to you as the owners, as opposed to, your other employees. That's not going to work in every industry because you're not going to have the ability to exclude the bulk of your employees. This really works well for union contractors because those union employees are by default excluded. So yeah, that's just an example of, okay, this is a broadly applicable opportunity out there, but how do we apply it to a specific contractor and take advantage of it for them?
Wow, that's super intriguing. So these are some opportunities, certainly. What are things that are just mistakes that you see? That you say, like, what were you doing? Like,
yeah,
obviously you don't have to name any names, but you just walk in and you're like, what the hell is this?
Yeah. Another great question. Going back to that kind of topic of methods that I mentioned earlier, I think there are misapplications there, again, where you may be required to utilize the percentage of completion method on specific jobs. And if you're not using that method, you're technically out of compliance. So that's an area. And there's something that kind of goes along with the percentage of completion method of accounting that I see overlooked on a lot of returns. This is not a business owner problem. This is a problem with my industry of accountants not understanding construction. There's this concept of interest look back that the IRS requires you to calculate if you're using the percentage of completion method. Without getting too deep into the weeds on it, percentage of completion method is based on estimates. So you're estimating your income throughout the life of the job. It's based on the cost that you think you're going to incur, but that number is not defined until the job is done, right? So you're using estimated costs throughout the life of the job. Because you're using estimates, a creative person could manipulate the estimates to defer income into the future for tax purposes and not pay the tax on that until a future tax year to partially mitigate the manipulation that could go along with those estimates, the IRS says, well, if you push a bunch of profit into the future and you're not recognizing that in the tax year that you really should have, we're going to charge you interest. Like we're going to make you recalculate the tax that you should have paid back in year one, and we're going to charge you interest on that. So arguably, you're still getting some benefit of keeping the cash in your hand into the future tax year, but you will ultimately have to pay some interest on those profits that you deferred. So that's something that I just don't see done frequently on tax returns when I'm looking at onboarding a new client. What are maybe some other mistakes I see in this? May be a little bit less of an issue now that we have 100% bonus depreciation available to us. So part of the One Big Beautiful Bill Act that was passed back in July, it reinstated 100% bonus depreciation. So that effectively means for contractors, most of your vehicles, equipment, heavy equipment, even small tools, things like that. All of that, you're going to be able to write off 100% in the year that you make that capital expenditure.
Okay.
There may be some exceptions for certain vehicles. If you're going out and buying a Porsche or something and using that as a business vehicle, there's going to be limits that apply there. But what I had seen for years when 100% bonus depreciation is not available is that a lot of people don't realize that your pickup trucks and your like work vans, things that like a contractor may have a fleet of, those would not be subject to the same limitations as other vehicles. And I would see people applying those limits incorrectly. And so you're not getting the full deduction on your really any like 1500 series and up truck or a work van, like a Sprinter van, things like that. Those vehicles should be depreciated without limitations. And I would frequently see people applying those same limitations that you would have on your Porsche to your construction vehicles. So again, shame on my industry for not knowing the rules there, but definitely an opportunity that has gone missed as I've, again, reviewed other tax returns over the years.
Yeah. Well, that's why you exist, right? Like
right.
You say that all the time. If Microsoft was perfect, we wouldn't have a job because
good point.
That's essentially how IT works, right? For our end. But I noticed the book Traction behind you. I know we talked a little bit about EOS a little bit. Obviously, you've gone off on your own. So what have you learned from Traction, or what thoughts, what key components have you taken out? Have you been able to implement anything, or is it just, hey, this is a thing that I read to further my knowledge in that entrepreneurial knowledge base?
Yeah, so obviously Traction is meant to work for businesses of a certain size. A key component of Traction is the accountability chart and making sure that people are working on the things that they should be working on. So not something to perfectly implement for a one-person business, but I still like a lot of the concepts and try to utilize the frameworks that I can modify to a small business as much as I can. So for me, like quarterly rocks are huge. Every quarter, I kind of set somewhere between like 3 and 6 kind of goals for myself. Some of them, typically center around like business development goals, like, how much revenue do I want to bring in the next 90 days? There's a lot around, kind of software implementation and improving processes, things like that. So yeah, I believe firmly in the rocks, giving yourself a short to-do list for 90 days and, setting deadlines and holding yourself accountable, I think is huge as a small business owner. Nobody's holding you accountable to anything when you're the person in charge. And so having some form of structure or framework to help you accomplish goals and to stay accountable to yourself and to your team, I think it's really important. And whether it's Traction or, one of the other frameworks out there, I think Pinnacle's starting to see some growth. At least I'm becoming more familiar with businesses using that. I'm sure there's others out there, but yeah, having structure, I think, is just really important as a business owner. I like the VTO as well, the Vision Traction Organizer. So that, gives you some 1-year goals, 3-year goals, and 10-year goals, and kind of helps you just define your business overall. Not quite like a mission, vision, and values, but very much along those lines as well. So yeah, those are just a few of the elements that I've sort of cherry picked out of the overall framework that I'm implementing as a sole practitioner.
Yeah, absolutely. Once you start growing more and more, I'll introduce you to our implementer who's in Chicago.
Great.
So yeah, we've been in the US for 6, years, I think. It's awesome. It's amazing. It's helped us. We mentioned structure. I believe that everything is structure in life. Obviously, you have to have the right mindsets of things, but you can structure everything in your life. And to your point, we love EOS because we're on EOS, but great game of business scaling up, Cultivate Advisors, Petrocoach. There's so many of them. So yeah, it's super important to think about things on the business. You actually mentioned earlier, not working in the business, working on the business.
Right.
The rocks are a good example of that. Like, how do I move something forward? Like for me this quarter, a new website, hiring marketing resources, pushing out X amount of lead magnets. Like there's a bunch of stuff that I have going on. And it's, implementing new CRM. Literally, it's like, oh, wow, how do we just do these big gargantuan things while
Yeah.
also still doing the day-to-day stuff that's required to make sure that the business produces revenue?
Yeah, it's hard. And for any small business owner, I mean, you're probably wearing a dozen different hats, trying to get everything done. It's really easy to focus on what am I doing? For me, maybe it's tax returns and monthly accounting. Like maybe that's the bread and butter, but I got to be getting out there and making that next sale, right? And I got to be staying on top of new technology. I'm not one to comment on AI and how that's going to shake up the workplace, but I'm seeing opportunity out there. I'm seeing new tax and accounting softwares rolling out that are utilizing AI, and it's like, well, I have to be the first person to use it. I don't necessarily want to be the adopter is the right term. There's kind of the like tech sort of cycle that but I'm not a Luddite either, right? I want to be early to the stage, but I don't want to be the one that's burning up all of my cost testing things. I want to get in when things have been vetted a little bit and take advantage of those. So you gotta somehow find time to manage all the other aspects of the business beyond just this is the core thing that brings money in. And that's obviously critically important, but you got to always be looking ahead to what's the next thing that I need to get done to.
Yeah, well, they say that tax code is, or at least most people, probably not maybe for you, tax code is like the most difficult thing to understand. It's harder than Arabic, essentially,
Yeah.
for an English speaker. And it'd be very interesting to see what the impact AI has in that realm of things. I think it's going to be interesting to see what happens on impact on everything, including the construction industry, which we've had lots of people on the show that have created estimating agents where it's like,
Yeah.
our estimator used to go on site for 2 days and now it's like they're on site for like 2 hours and it's getting done. It's just a wild time to be alive, as they say.
Yeah. What's interesting about your comment there is that the estimator was on site for 2 days. Now they're on site for 2 hours. The estimator hasn't lost their job yet, right? I mean, it's, I don't know. Hopefully I'm right about this. I think it's going to be a tool for a lot of us to use to make our jobs easier and more efficient and not necessarily going to be taking everybody's job like some of the, fear mongering out there might indicate. But again, I'm not an expert. So.
Yeah, well, it's certainly, for me, it's about being better.
Yeah.
One of our core values is continuous improvement. So it's like, how do you get better, right? Not how do I remove somebody? How do I pull somebody out of a job? It's like, how do you make them better? Because if they're better, they're inherently going to be able to do something. Like now, is that the same exact thing that they were doing? No, maybe it's 3 levels up, or maybe it is something that has a completely different angle to it. But the point is, when you get better, right? So you have a structure that gets you to improve continuously. And I think tools are a good way to do that. And AI should be seen as a tool, not necessarily seen as the boogeyman. I guess is the easiest way to put it. But yeah, a lot of people have a lot of concerns about that going forward. But as a single entrepreneur or a solo entrepreneur, AI could be a massive tool for you to utilize because like you do only have so much time in a day and you can only do so much stuff. So some things you have to do. There's no way around it. But are there things, I don't know, can you utilize that tool? Or, obviously other resources, but talking about AI, it's like, oh, those are ways that you can get smaller businesses to be able to compete faster. I think that's the other part people forget, like, oh, well, this is actually going to help small businesses as well be able to be more competitive in the industry.
Yeah, I got a couple stats that I wanted to share because this came up in a conversation I was having just a couple weeks ago with a business coach that works with contractors. And these are a little bit dated. I think these are from 2023, but these sort of came from 2 different meetings that I had. And when I thought about the two statistics or sets of statistics together, it was kind of an eye-opening thing for me. This is from a Bureau of Labor Statistics. It followed about 70,000 or so construction firms that started up in the early 2000s. 56% were in business after 3 years. 26.6% were in business after 10 years. And 17.2% were in business 22 years later. After 3 years, almost half of the construction businesses had failed. After 10 years, about 3/4 had failed. Now, I was at an accounting conference just a couple weeks ago, and they were sharing some interesting statistics as well. So here we have 70% of small businesses operate without an accountant. 90% of business clients are interested in advisory and consulting services from their accountant, but more than half of them admit they're not fully utilizing their accountants for the breadth of services and insights they can offer. 60% of small business owners feel they aren't knowledgeable about accounting. So to me, two separate sets of statistics, right? One of them says that it's very hard to be successful in construction, right? The other one says this is not specific to construction businesses, but overall, small businesses are not utilizing their accountants to the fullest extent. Many of them not utilizing accountants at all. I'm not necessarily saying that if you provide better service that you're guaranteed to help your construction clients be successful, but I think there's something there, right? I think even as a small business, you might be just getting started. I think getting an expert in your corner as early as you can budget for them as possible. As soon as you have the additional funds to bring that expert into your corner, I think that's going to increase your odds of success tremendously.
Yeah. Oh, we see this with the tech side too. Same thing, where it's like there's, it's seen as a cost. Like, and I'm sure that that's a little bit of the accounting side too, where it's like it's seen as a cost. Like,
yeah,
I don't need this thing. But certainly when you scale, and certainly when you get larger, and not like crazy large, but you start growing people, it becomes so apparent that like, oh my God, I absolutely need this. There's no way around it. And we just saw this with our internal finance team, where it's like, wow, like the amount of processes and all these different things that we put in place. It's like, it's interesting how long business will go without fully embracing some of these, like if it's accounting, or if it's marketing, or if it's IT, if these, I call it business units, right?
Yeah.
Even though there's such a structural component to any business, it is always baffling to me. But stats are the stats, right?
Right. Yeah. I mean, I would like to think that whether it's accounting or IT related, it should be very possible to run a return on investment analysis on that expense. And I can't speak for your industry, but I can speak for mine. Like, we're going to come out ahead virtually every time, right? We pay for ourselves many times over in terms of the tax savings, or just business advice, giving you good financials so you can get a good interest rate from the bank, or you can get bonded to do that job, or whatever it might be. We're going to pay for ourselves.
We find that it's easier for us to showcase that value in two major ways that are very obvious, that it's like, it's not even a question anymore. It's like once they start doing more public work that has more scrutiny when it comes to their cybersecurity. Okay,
Mm-hmm.
It's like, hey, I can't even do these jobs now if I don't have the right stuff in place. It's super easy. It's like, well, how much of those jobs do you want to do, and how many would you have won? And now that's an easy one. And then if there was any form of breach, that's another place where it's like, well, how much did this cost you? What would you have spent had you had something in place that was a proper, cybersecurity practice, right? So those are the very easy. It gets into the productivity of IT, becomes like we've done this we walk in and say, okay, well, let's just time how long it takes you to do things just based on the technology. And it's like, okay, here's, 5 seconds, here's half a minute, here's 3 minutes. And it's like, okay, how many times do you do these things? And then you just come out and say, okay, based on your average hourly, here's the amount of money that you're losing just simply based on your technology sucks. Like, that's very simple that way. And what we found is like people are always baffled. And it's like, yeah, you've been just living this way though for a very long time. Like, that's just kind of, you've become numb to it essentially. You say, that's just how it is. It's kind of like why do we do this? Because that's the way we've always done it. And it's like, that's always the worst answer on it.
Oh yeah.
Yeah. All right. So, okay. So what we don't have so much time left here, but what kind of closing advice would you give to a contractor that's either feels like they're not having their taxes done right, or they're overpaying, or what they feel like there is an issue when it comes to their tax and accounting?
Yeah, I mean, as an entrepreneur, taxes are the largest personal expense you're going to incur during your lifetime. So I think, I guess first to your point is acknowledging that maybe there is an issue here, acknowledging like, okay, yeah, maybe my current provider is not providing me everything that I need. Maybe I need to step it up. Maybe I'm doing things myself to save money, and maybe that's not the area that we should be saving money in, because to your point, whatever time you're spending on it is not efficient. So it's not only the potential cost of mistakes that you could be making, but also just the time that you're wasting on things. So I would say, we're here, coming up on the end of Q3. Now is when I start reaching out to my clients to say, hey, we need to start doing year-end tax planning. We just had a major tax bill passed in July. There's elements of that tax law that are in effect for this current tax year for 2025. There are other elements of that are not going to be effective until 2026. So like, hey, we need to have a conversation. We need to break this down, see how this is going to impact you. But my advice is, be proactive. Look for a relationship that person's going to be proactive back with you. Don't expect that the CPA that you hire is necessarily going to be doing all these things. Like, make sure that you have meetings with them, that you're, getting in front of them before the end of the year. We can add a ton of value if we talk to you before the end of the year. Once the calendar moves over to January, our hands are a little bit tied. There may be some strategies we can implement after the close of the tax year. But for me, it's just be proactive in finding that relationship, and find a relationship where that person's going to be proactive with you. And we exist to help businesses be more profitable. And sometimes that's going to be by saving them taxes. Sometimes that's going to be, these other areas where we're, helping you make business decisions. Should you go out and buy that next truck? Should you hire that next employee? We want to have good financial data available to make those decisions. But I think at the core of it, as CPAs, we want to help, our clients run more profitable businesses. And so, I think just, find that relationship where you're going to be in touch with somebody throughout the year, and you're going to be doing planning and staying on top of things, and, it'll work out.
No, that's awesome. If somebody wanted to get a hold of you, what's the best way for them to do that?
Yeah, I mean, I'm not super active on social media, but LinkedIn is the one where I probably am most active. So you can add me on LinkedIn. We could certainly have a conversation there, or I'm sure we can put the link to the website in the show notes. And all over the website, there's the kind of contact me or get in touch links. I think every page has it multiple places, so it's all over www.builderstaxgroup.com. And, fill out a short form, and we'll jump on a call. I'm happy to do kind of free complimentary sort of tax analysis for prospective clients. Just take a look at prior returns and give you some advice on opportunities that you may have missed. And be happy to schedule a call with folks.
Awesome. Anything else you'd like to tell the people before we say goodbye?
Yeah, I don't know. I mean, it's crazy times to run a business right now, and there's a lot of things that are happening, and we want to be there to help you. So do not I guess take an accounting relationship lightly.
I've learned more about tax today than possibly my entire life, which is
Awesome.
Maybe a bad thing, but that's a good thing for you, a bad thing for me. So thank you a ton for your time, Cody. And until next time, adios.
Thank you.
Thanks for listening to Building Scale. To help us reach even more people, please share this episode with a friend, a colleague, or on social media.
Remember, the 3 pillars of scaling a business are people, process, and technology.
And our mission is to help the AEC industry protect itself by making technology easy.
So if you think your company's technology pillar could use some improvement, book a call with us to see how we can help maximize your IT and cybersecurity strategy. Just go to buildingscale.net/help.
And until next time,
Keep building scale.